Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Malaskis. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to Pique Your Interest podcast. My name is Tanner Greenwald with the Greenwald team of First Home Mortgage.
And I'm Tim Malaskis, a loan officer here in the Millersville branch.
So today we're going to be talking about navigating a complex market. And that involves us talking about a couple of statistics that we found online, looking into micro versus macro market, what that means, how that might be helpful to you as a buyer. So, we're going to talk about things like that, how to spice up your offer. So this is a good episode for you to listen into. So let's kind of dive in. Did you want to say something?
No, I was going to say they're all good episodes, so you should dive into all of them.
Right.
But go ahead.
So micro versus macro. So if you think about literally the words, I think of micro as being smaller and macro being bigger. So when we're putting that into almost talking about the market, micro marketing is looking into the smaller aspects of a property, where macro is looking into the bigger, the economic picture of everything. So when you're kind of thinking about what those look like and how they affect the market, it gives you answers as to why the market is the way that it is. So Tim, do you want to take it away and kind of give examples of some micro versus macro?
Yeah, absolutely. So when you think about like the bigger picture, what's going on in the overall economy, we look at things like the jobless rate. Last couple of years, we've heard a lot about inflation and, the inflationary pressures that, that's why we're seeing higher interest rates. And so there's a bigger economic picture. So there's a lot of things that are going on. There's a jobs report, how healthy is the economy, whether we're in an inflationary environment or stagflation, or, it appears we're getting back to something a little bit more normal, and we've seen rates stabilize the last couple of weeks. So it's just looking into what is going on in the economy overall. So almost every week there's some kind of economic driver out there. There's, like a consumer price index report, or a jobless claims, or a jobs report. Just things along those lines that sort of let everybody know where the economy is going. And then every 45 days or so, the Federal Reserve meets, and at the conclusion of their meeting, they talk. Federal Reserve Chair Powell gets in front of the press and starts talking about, sort of the things that they talked about in their meeting. The minutes are released. We can see what they're talking about, where they think rates are going. All of those things impact the overall economy and where we're seeing interest rates go. So it's important to understand that it's not just, interest rates go up, interest rates go down. There's a why for it, and learning why interest rates move and sort of, the correlation that it has with the economic environment is kind of important. So, if you're trying to time a home purchase the right way, if you've got the time and the luxury of the time to do this, you can wait until, you have a really good environment where you see like descending interest rates or something along those lines. But if you're not paying attention to what's going on in the economy, you're not going to know how to time that. And as far as the smaller picture, the more local picture goes, it's things like, the schools. Obviously, that's a huge driver of what the values of homes are in your specific community or your county or your town or, wherever you're looking to buy. So things like the crime rate also plays a part in that. Real estate agents can't talk about things like that. They can't talk about schools. They can't talk about crime. But obviously the internet's good for a lot of things. This is one of the things that it could be good for. You could do some research into what the school systems look like, what the crime rate is. Other things that you could look into are, if you have an HOA, if there's an HOA in the community in which you're looking, a lot of people feel strongly that HOAs are great. A lot of people feel strongly that HOAs are terrible. But if you're a person that likes HOAs and you like the consistency that an HOA brings, that could add value to a property. So just knowing all the little local things, do you have amenities? Is there a pool? Is there a water access? Is there a golf course? Things like that drive, very specific neighborhoods and very specific streets. So you understand the economy overall, where sort of rates are heading, where housing prices are heading, and then you understand, the small stuff, that specific neighborhood that you're looking in, why values are doing what they're doing there, and what sort of things make that property, appealing or unappealing to other people.
Yeah, I agree. And speaking of drivers of the market, economic economic factors, they play a huge part in why the market is the way that it is, kind of thing. Inflation, any type of global events. The first example that comes to mind is the Key Bridge example here in Maryland. So when that unfortunately fell, that affected, I think, heavily the car dealership industry.
Totally.
And while that has nothing to do with the home industry, it all kind of ties together at a certain point, and it does affect inflation, and it is a global event that affects a lot of people around the area, especially to Maryland. So that is affecting, what you're able to purchase in home and things like that, I would think.
Could I jump in for a second?
Of course you can.
So I have a client that I was working with when the Key Bridge fell. They worked at the dock, and there were no ships coming in. Ships couldn't come through. So this client actually had, a period of weeks where they were off of work, and that completely changes what you qualify for, whether or not you qualify, and whether or not you even want to be buying. So events like that, economic drivers, for better or for worse, obviously this one's for worse, that really impacts, that's just one person. That just happened to be one person that I'm working with. I'm sure there are other people that, longshoremen that work at the dock that want to buy a house that were impacted by that. So, these things don't feel like they always coincide with what's going on in, the market overall, or specifically the housing market, but everything kind of feeds into each other.
Yeah. And I mean, you have a whole bridge down, so that doesn't allow access for that whole other side of the bridge unless you go through a whole other way. So it's almost like even showing homes in that area becomes hard and things like that. So those are things you want to take into consideration when thinking about the way that the market is and why. Another reason is like supply and demand. One of the biggest things we've been talking about for a couple of years now is inventory and how low it is. And you've got all these buyers out there wanting a new home, especially first-time home buyers, and there's just not enough inventory out there for them to go find, or they find themselves in almost bidding wars, and then they become frustrated, kind of thing. So, when you have low inventory and you have high demand, that causes an issue in the market, and that is something that we've been dealing with ongoing now for, I would say, a couple of years.
Definitely.
So we do actually have some statistics for you guys that I've found interesting. So I'm going to kind of jot them off for you. So we're comparing 2020 in May of 2020 to May of 2024. So the median home price in May of 2020 was $320,000. The median home price in 2024 is $430,000. So you can see a jump right there.
It's a huge jump.
Right? In May of 2020, the active inventory was recorded at 13,838 versus May of 2024, the inventory was recorded at 10,121. So you can kind of see a drop there as well.
Huge.
And another statistic to throw at you. Projections. Well, this isn't really statistics. It's almost just like, what are we projecting the market's going to be doing? So, the first half of 2024, rates have kind of stabilized. They haven't necessarily skyrocketed upwards, but they also haven't skyrocketed downwards. Right. We project that the second half of 2024, they're probably going to remain constant. We aren't projecting them to be going up, but we aren't projecting them to be in the 4s or the 5s like people were used to back in 2019, 2020. And something to kind of note on it, sellers in 2023 were holding off on putting their house on the market for whatever reasoning that they were. Some people just decided not to move in 2023. I would assume that if you held off in 2023 and you were looking to sell your house, that 2024 might be the year that you're looking to put it on the market. So that's something that we were, reading up on as well.
Yeah, there's certainly no shortage of buyers out there. There's plenty of people who want to buy houses. There's just not enough inventory. So if you're one of those lucky sellers that can satisfy, some buyer's need, then I think you're going to find yourself, pocketing a good amount of money.
I agree. How do we stay proactive, Tim?
Proactive. So I would say that the first thing that you should be doing, the market is a lot different now than it was, say, 3 or 4 years ago. I think it's harder to stay positive because what I'm seeing is a lot of clients putting in offers on houses. And, they're one of, we're not in the days of 2021 where there were, 20 offers on each house. But there's still a good 3, 4, 5, 6 offers on houses. And so, you can't win them all. And when you don't win, it's defeating. It's deflating. You feel bad that you didn't win. So one of the big things I'd say is stay positive. Just approach it with a positive attitude. I think that we see more inventory now than we saw, in the first 6 months of this year, or maybe even all of last year total. So it feels like there's more on the market. So the chances of you being able to buy, win an offer are increasing as we speak. And as other buyers buy, they're removed from the market. And so maybe you have a little less competition than you did before. So I would say remain patient, remain positive. One of the things you can do is you can ask us a lot of questions. Ask us your questions, ask your real estate agent questions, figure out, what sorts of things can I be doing to make my offers more appealing? What could I do to stand out to a seller? What makes a winning offer look like a winning offer, and how do I compete with other people? I think, asking these kinds of questions of people who have answers like us is something else that you could do. So certainly remain positive, ask a lot of questions, sort of approach everything with an open mind. And I think that nowadays you will find more success than you probably were finding over the last couple of years.
Yeah, I agree.
And so there are a couple of things that you could do to spice up your offer, to make your offer a little bit more appealing. If you're putting down enough money and you're doing the right kind of loan, one of the things that you might be able to do is get an appraisal waiver. Fannie Mae and Freddie Mac have been compiling this data over over more than a decade at this point. And they're pretty comfortable with what they think the values are in certain neighborhoods for certain houses. And, if you're buying a primary residence and you're putting 20% down and you've got really good credit, there are ways that, you can obtain an appraisal waiver. And if you're telling the seller, hey, Mr. and Mrs. Seller, I'm going to buy this property from you, and I don't even need to get an appraisal, so we don't have to worry about what one appraiser's opinion of value is. That's a really appealing thing to sellers, because that's one less thing that could potentially go wrong. It doesn't happen often, knock on wood, but every once in a while it does. And so you just want to make sure that if you can remove that contingency from your contract, that you are. So I think that's a really impactful way to be able to do that.
How many offers would you say you've won by incorporating the appraisal waiver into the offer?
It's hard to put a number on it, but it's a fair amount. I mean, just the other day, we were one of 3 offers, and one of the things that we offered was an appraisal waiver because both Fannie Mae and Freddie Mac were exercising it. And so we said, you know what, let's go for it. Let's write this offer. Let's not get an appraisal. And that's one of the things that the seller really liked about the offer.
Yeah. So.
Yeah. Another thing that you could do is you could forego home inspections or chimney inspections or radon inspections or mold inspections. I don't necessarily recommend that you do that, especially if you're a first-time buyer, because there's a lot of good information in there contained in those reports. But if you're the kind of person, you're a little handy, or you don't mind having to do a few projects, and you talk to your real estate agent feels pretty good about it, you feel comfortable with it, maybe you consider doing an inspection for informational purposes only, not asking the seller to make any repairs based on what you find, or, limit the repairs. I'm not going to ask you to do something unless it costs X amount of dollars. But that's certainly a conversation worth having with your real estate agent if you're in the market to buy and you're looking to make your offer a little bit more competitive. Trying to exercise an appraisal waiver, trying to limit the number of inspections that you're doing, or the reason that you're doing the inspections can also be really effective methods to helping that. But what are some others that you can think of?
Well, if your client, your RI client, has the means to, you could have the buyer pay for the seller's portion of closing costs. That doesn't happen all the time. And again, if you have the means to do that and you've got the extra cash and that's how you want to win an offer, then that would be a great idea. Another thing would be quick close times. So a lot of times if you decide to go through a program, the loan starts with us. We do our in-house processing and underwriting, and then we have to submit it to the program, and they do their thing up at the program. So that does add time onto an offer. I would say if you go through a program, some programs require a certain amount of days to be left on a contract before they'll even accept you into the program, kind of thing. So if you want to use a program, you can. So this necessarily wouldn't be the best if you're using a program. But typically, if you're not using a program, we can close it within 2 to 3 weeks, kind of thing. And that's something that's very appealing to sellers, because the last thing that they want to do is be sitting for 30 days and waiting to hear, is everything good? It's almost like an anxiety for them as well, because, if something happens and the buyers aren't able to purchase this home, then they got to do everything over again. So quicker close times, that's a good, I think, example.
No, totally.
Yeah.
Absolutely. I think, you asked the question about appraisal waivers and how many offers you get accepted. I think you get just as many offers accepted, maybe even more if you're able to close quicker. That's something that sellers real estate agents are looking for.
Yeah. And in light of the new NAR settlement and all that stuff, what buyers are able to pay for and what they're not able to pay for, that's kind of still ongoing.
Yeah, we're still navigating that.
We are. Even us as lenders, we are trying to figure that out as well. But your buyer can pay for the real estate agent as well. Again, if you have the means to do so. So don't put yourself underwater by doing any of that. But these are all options for you that can spice up your offer. If you've been putting in offers multiple times and you realize this is the 5th one I put in and it's not getting accepted, what the heck is going on? Like Tim said earlier, don't get discouraged, be persistent, be positive, keep going. We're all a team at the end of the day. So we want to help you.
Yeah.
This is our job. So ask us the questions.
Totally.
We're here.
Yeah, absolutely. So we're here to help. So make sure you put us to work. There's a lot more to the mortgage industry than just, quoting interest rates. There's a lot that goes on behind the scenes. And, hopefully we've sort of peeled that curtain back a little bit and helped you understand, where rates come from, what drives interest rates, what makes offers competitive. Those are the sorts of things that I think people need to be hearing. And, again, just stay positive, ask a lot of questions. You are dealing with experts, hopefully, in theory, you're dealing with experts in this industry. And so asking us questions, putting us to work, getting the answers that you need to be able to, win offers and find the right house and things like that, I think is essential. So don't be afraid to ask.
Yeah, I would also just say, while we're here to help, you also have to do your due diligence as well as a buyer or a seller or whatever, real estate agent, whatever it is. You have to do your own research too. Bring the research to us. We can validate it. We can ask questions ourselves. So we're here to help, but, be persistent in yourself and look into this stuff because this is important. If you want to buy a home, this is all very important stuff. So thanks for chatting with us and have a great day.
Yeah. Bye.
Bye.